A very busy business and trading week. Our markets came to an end on Friday, and today we're taking a quick look at the big stories around the market and the big stories you need to follow moving forward. Welcome everyone to Capital Market. I am Bosin Damafai. I'm in today for Temple Ashaju, your regular host. Let's start with what the Nigerian Stock Exchange reported during the week, saying foreign investment outflows from the Nigerian equities market rose a whopping 125% in the month of May against the period in April, as total value of listed equities in the Nigerian market dipped 1.146 trillion naira. We're now looking at the index around 13.4 trillion. The latest stock exchange report says 3.45% was recorded as decline in foreign inflows in the month of May, while outflows from the local market jumped 124.7% from 58.2 billion naira in the month of April to a record 130.98 billion naira in the month of May. The Nigerian market were knocked largely due to the exit or mass exit of hedge fund managers from emerging markets and frontier markets around the world, putting their assets back into the United States because the U.S. FOMC, that's the Open Market Committee, or the U.S. Fed, is raising rates and monetary easing as well in the European Union. All those contributing, as well as investors getting a little bit pussyfooting about the next elections. But we have one good news. Nigeria's frontline investment and financial services group, Chapel Hill Denham, has been awarded Africa's Best Bank for Advisory at the Euromoney Awards for Excellence for the year 2018. The awards was held on July 11th, this week in London, and that Euromoney annual event, if you're in the know, parades the best of investment banking and related services. That is one good news we have in our own kitty. But let's move on. What is the outlook on the market? ARM research analysts said the firm will feature excerpts from their core strategy report entitled the Nigeria Strategy Report over the next few weeks. The ARM says the new report communicates their understanding on key happenings in global and domestic financial markets over the first half of 2018 and provides insight on what they believe will be the major themes underpinning investor sentiment for the rest of 2018. Stick around. We have a part of that conversation with Michael Famoroti from Vetiva Capital in a minute or two. Meantime, the number of listed companies floating commercial papers on the Nigerian market instead of new equities or debt are increasing. Large cap brewer listed on the Nigerian Stock Exchange, Nigerian Breweries PLC, announced 80 billion naira commercial paper offering to finance the company's short-term operational needs. Before that, Dangote Cement is already in the market with 150 billion naira program floating the first tranche of that amount, 50 billion naira, on FMDQ OTC Securities Exchange. And we have a lot more for you as far as the market is concerned. Let's take a quick look at the marketplace. How did we finish off at the Nigerian market equities side of things on Friday? This is what our week looks like. 0.62% decline on the all-share index. The equity cap finished 13.546 trillion naira. On Friday, we traded 1.27 billion ordinary shares worth about 17.33 for the day in 17,362. You've seen the numbers a little bit earlier on. As far as the market is concerned, this week 0.602, 37,392 in terms of the week. Look, let's take it out and see the sectoral performances. The banking sector bled 2.10% in the week we just finished. Insurance lost a whopping 5.10%. Consumer goods lost about 0.5%. Industrial goods in the negative territory, a negative 1.29%, while oil and gas was 0.71%, about 0.75% also in negative territory. That's the broadly. So the equities market remained bearish across the board. That was the story for the week. Now let's move on and check with the NESE over-the-counter markets. The smaller unlisted securities market was about 0.75% better than expected, and keeping what we saw on Thursday when that market crossed a number of new floors. And that's the US side there for you, hitching a new high of 690.5 on the reading, and the market cap for the over-the-counter unlisted securities market 467.28 billion. The 450 billion was crossed again on Wednesday. It added a good reading on Thursday, and on Friday finished on the very positive side. And of course, you can see the trading volume there. If you take that away and see what the next page looks like. And then you look at the fixed income market. Of course, we need to squeeze that in here to look at what the markets will be. We had inflows from the matured open market operations, or what we call the treasury bills of the market. The Nigerian Central Bank on Thursday, as always, repaid 406.8 billion naira, and that was big enough to moderate liquidity and interbank rates on Friday. That was bigger than the sale of 351 billion of short-dated treasuries, as well as the FX sales of 210 million US dollars. What you're looking at on your screen is via the FMDQ OTC Securities Exchange in terms of the Naira bonds. The foremost actively traded 6.80 billion. But if you look at the treasuries on the next page, that gives you a better picture of where investors are pitching in 163.76 billion naira. We're expecting on Wednesday next week, the regulator, the central bank, will offer 178.4 billion naira in new treasury bills and try to take a few more naira off the street. What's the macroeconomic play for the markets as we look into the next 2 weeks of the month? Let's get Michael Famoroti, who is the chief economist at Vetiva Capital Management, to talk to us via Skype from downtown Lagos. Good evening, Michael, and thank you for finding time to be with us at this very important time when you folks are more interested in what goes on in Russia with the World Cup than any other thing, I guess, with the finals set for tomorrow.
Evening, yes, I'm very excited for that.
Yeah, well, what's your take tomorrow's finals, 4 p.m. Nigerian time? Let's play ball with it first, then we play the markets.
Well, I do think that France are going to run away with it, although I have a soft spot for Croatia, but we'll see how that goes.
I see a lot of folks in Nigeria having a soft spot for Croatia, but the French president just left here. And he thought it was friendly. Why are you guys not so interested in it? Okay, I understand. That's a football politics. Let's leave that for now. We have a number of issues on our own hands as far as the macro economy is concerned. What's your outlook? Inflation, according to the latest IMF staff report, inflation will likely begin to turn north in the second half of the year. MPC decisions 23rd and 24th. June inflation suspended until July the 23rd. They will have second quarter earnings any moment from now. Squeeze this for us, please.
Yeah, so I think consensus really is that we've seen most of the moderation in inflation already. So come perhaps the end of the third quarter, we're likely to see an uptick. I mean, if you look at food prices in particular, they've already started showing signs of going up. So I think that is consistent with what the CBN also has suggested. In terms of earnings, I don't think the story has changed in particular. We do expect the second half or the second quarter to be a year-on-year improvement. So a lot of that growth, for example, should come from the banking space. The tier 2 names who didn't fare so well in 2017 should begin to see an improvement. We are going to be looking very closely actually at the consumer goods names, because in terms of performance this year, they've been beating down the most, and we're all aware of the excise duties that came in place in July. So Q2 results, or H1 actually, would act as a baseline for us to compare for the actual effect of the excise duty post-July. So that's probably the most interesting sector to look out for.
Yeah, in terms of where the MPC goes on July 23rd and 24th, I'm sure you as an economist with the rest of your research team will be looking at what's the tightrope that the MPC is looking for. I spoke with a senior economist, Bismarck Rawani, about an hour or two ago, and he's looking at, look, the window is closing on the central bank or the MPC to lower interest rate with the latest IMF report and a few other stories. What's your take on where we go on MPC, looking at if we discount June inflation or anytime it comes out on Monday and we begin to look forward?
Yeah, so our take actually is that the tightrope has passed. The window is closed, and there really is no opportunity to ease. Most expectations or consensus is looking at higher inflation in H2. And ahead of that, it would be terribly imprudent of the MPC to act otherwise. And again, this is something that they have echoed already in their May and April statements, that when you expect this level of fiscal expansion, monetary policy cannot be expansionary, else the economy begins to heat up and you have high inflation in 2019. So the reality is the window probably closed around April, May. And now what we will be looking for is clearer signals of the MPC's belief about inflation in H2. Moreover, what has struck me about this new committee is that they've paid a lot of attention on private sector credit to banks or from banks. And what is clear is that they are not particularly impressed with the level of credit growth that is occurring, and they're also not convinced that easing monetary policy is going to change that. So I think they're going to be more focused on de-risking lending to key sectors as opposed to trying to cut interest rates, because their belief seems to be that that is not going to make a difference.
So the body language from the MPC from the last meeting and the minutes you have is that, look, let's do a bit of a sectoral push. We can't carry everybody along. Sorry, folks. We can't do a general interest rate easing, but let's be specific, sector specific. Maybe that will help. Now, do you think that we are now in a bit of a structural logjam that we're unable to raise rates? Then we'll move on into the election. We're not sure what the strategy of the new political managers will be from May 29 next year, whether the incumbent or the new one. Even if the incumbent remains in power, we expect some macroeconomic changes, as it were, at least for the second term of their tenure in office.
Yeah, so I do think more clarity will come post-election for the MPC. Actually, I think even beyond fiscal policy, the situation in the agriculture sector is of greater importance. So what kept inflation so high in 2017 was food prices, and we may begin to see again more serious pressure coming from there. So that's probably what they're going to focus on more over the next 9 months, even with the elections. I think once you get past February and you've gotten past the most intense period of government spending, then the relationship between fiscal policy and monetary policy again starts to weaken, and the MPC is able to focus on its own mandate of just maintaining price stability and leave the growth issue, or leave the direct impact of the growth issue, to the fiscal authorities.
Michael, just about 1 minute to wrap up this conversation. Give us your take on the yield curve.
Yeah, so the yield curve is actually a very good story because it's now a normal upward sloping curve. So since I remember, actually, maybe mid 2016, we had a situation where yields were peaking at the 1-year rate, and generally short-term rates were higher than long-term rates. Now, fixed income 101 would tell you that this suggested a recession and suggested a lot of uncertainty about the near term. Now, what we've seen, thanks especially to the CBN's HOMO policy, is that yields on short-term rates have adjusted by about 10%, really, because if you look at a 1-year bill that is now trading at around 13%, 2 years ago it was around 22%. So we've seen a normalization in that area, and what it does now is that the yield curve properly reflects the duration risk of borrowing, which is key to ensure that credit actually flows to the right sectors, or in simple terms, it's key to ensuring that people and banks aren't just parking their money in treasury bills and getting them after 1 year, but they're actually going to look at more variable instruments to invest in.
Michael Famoroti, the Chief Economist at Vetiva Capital Management. Thank you very much. Enjoy the weekend, and let's compare notes on what happens at the World Cup tomorrow, Sunday. Let's come back after the break. The African Development Bank has a new program or initiative with the African Securities Exchanges and with the Nigerian Stock Exchange in particular on how to get the MSMEs to go to the debt market onto listings across the various regions. Let's listen to Stella Kilonzo when we return.